I want us to like start the class as I promised you guys that every Sunday I want you guys to take the opportunity. Every Sunday you are going to be analyzing our charts live before the market starts on Monday, before the market starts. So now I don't think I'm going to like wait for others. So this class is just for 1 hour. This class is just for 1 hour. First, I'm going to start with gold. I'm going to start with gold. I used to do my top-down analysis in the higher sample bias. If you are in my mentorship class, you know that I always start my analysis from the 1 day time frame. So first of all, we have this order block in which price is currently reacting to, and that order block in 1 day time frame, we have this little break of structure to the upside. Now price is reacting through this order block. Price is reacting on this order block which is here now, but we are not looking about this order block because this order block have already dished out the move. The order block already dished out the move. Price starting from the order block and move to the upside. Now since price starting from the order block and move to the upside, price is currently like reacting from the daily time frame order block. Price is reacting from the daily time frame order block, which is here. So once we go to our little time frame bias, you know that this order block will be defined. But first, let's read out what our market is trying to say. For instance, we have this break of structure. We have this break of structure. We have this break of structure to the upside, and price is currently reacting from this order block here. Price is reacting from this order block here. So I want us to like go to our 4 hours time frame. Sorry for this. Let's go to our 4 hours. All right. Now in our 4 hours time frame, we should also look at this demand zone. We also look at this demand zone. So this is a demand zone, which a supply zone we should also look at. But first, let's read what the market is trying to say. First, we have this break of structure to the upside. And price is reacting from this other block. This price reacted from this other block. This was a move. Now we have this break of structure to the upside. Now price reacted from here, but the discount on which price reacted where is this discount on here. Now I want us to like mark out the other block since price is reacting from that zone. Now I want us to like go to our 2 hours time frame. Now in our 2 hours time frame, I want us to like refine the other block in our 2 hours time frame. Now here, this is the other block in our 2 hours time frame. But first, I want us to like read the internal structures in which price is giving us. Now, one thing I want you to know is that if you cannot read the market structure, you never understand how the market movement is going. First, we have this break of structure to the upside here. Now price also break on our structure to the upside, but this structure here is called liquidity. Price grabs as liquidity and reverses, and if you can see, price reacted from this supply zone which is here. Now I want this zone here is a structural break to the upside. Here is the main structural break to the upside. Now price reacted off from FVG and not the other block. Once we go to the little time frame bias, we can also see some little break or structure. And once we read this current price here, we can see this break or structure to the upside. Price also break structure to the upside here. And where is the origin? Price, this is the origin whereby price break structure. This is the other block. This is the other block in which price break structure to the upside. Now I want us to go to our 1 hour time frame. I'm coming, please. All right. In order to define each origin, and this is the other block. Price reacted off from this supply tower, from this FVGA. This is other block that breaks structure to the upside, right? I also have this break of structure to the upside. This break of structure to the upside. And if you're in my mentorship class, you know that this I always explain this. This zone here is inducement zone. You see how price disrespected this other block, right? That break structure because it's not strong enough. Price disrespected this other block. So I want to let you know that not all other block are valid to trade. Not other block are valid to trade. Now, price gave us a liquidity here. It's not a break or structure. I explained this in my mentorship. Price gave us a liquidity here, not since it's the last zone. Now, we have this internal break or structure to upside, but before then, price grab out liquidity from this zone. Price grab out liquidity from this zone. Price grab out liquidity from this zone. This is a liquidity before breaking structure to the upside. This is the origin that break structure to the upside. This is the origin that cause a break of structure to the upside. Now we are having two origins to take this trade on. We are having this origin 1 and also origin 2. So where do you think is the right part to take the trade from? Now the right part to take the trade from is from this origin. But first, let's refine it to our 15-minute time frame, which is the entry time frame. Now we are having this other block in our 15-minute time frame. This other block in our 15-minute time frame. Also, if I could refine also this liquidity, we have this break of structure to the upside, another break of structure to the upside. We have this as, let's call this as market structure sheets. Now, this is another break of structure to the upside, which price has given us, and also this is another break of structure to the upside. But price disrespected this other block, which is structure to the upside. Now, since I want us to go to the 15-minute time frame. The 15-minute time frame is that. So we have this other block in this zone, right? We have this other block in this zone. Now this is our demand zone. I cannot wait for price from this demand zone here. The reason is because this demand zone is here. This zone is here. Since I cannot wait for this zone, I'm going to take trade from here. I will leave this zone. But can you see this zone have everything, every constellation pertaining to SMC. This zone have every constellation pertaining to SMC. We have the other block, we have the break of structure to the upside, we have the FVG. But I cannot take a trade from here. I will use this side as inducement. I'm going to use this side as inducement. Now, for me, rather, I will look for a buy than a sell. But I have a sell setup here, which I'm going to show you guys. But before then, let me call out the coordinates pertaining to this. So my buy is going to be at this zone. I'm going to place my order at this zone. I'm going to place my order at this. All right. My stop loss is going to be at this. My stop loss is going to be a little bit from here. I think it's going to. All right. My stop loss is going to be 22 pips away, but it's kind of okay. So you need to reduce your order block. Sorry, your loss size. So I'll use this zone as liquidity and target the point of reversal, which is here. I'm going to target the point of reversal, which is here, and here is going to be the liquidity. Our price is going to take away, or here is going to be liquidity. Anyone you want to use, here is going to be liquidity from price, it's going to take it away. So this order block which is here is going to be a low probability order block in which price is going to take people out because people will be looking to take entry from here. But here is a high probability of order block we are going to take our trade from. Now, if I want to call, I'm going to write out the coordinates. I'm going to write it out. So if I'm going to like call a sell setup, right? If I'm going to call a sell setup, now I want you to like look carefully here. You see how price grabs out liquidity and move aggressively. Price rejected this order block. Price rejected this order block. Price rejected this order block. So this order block is endorsement. Since price rejected the order block, price gave us what we known as market structure shift. Price gave us what we know as market structure shifts. So we have this market structure shifts from here, and this is the order block that caused the market structure shift. Now, since this is the other block that caused the market structure shift, I also want you to look at things because if you do not understand how the market is working, you get liquidated the market. Now, we have this demand zone right here, right? We have this demand zone right here. Price like react from this demand zone and take out liquidity from here and take out liquidity before going to the downside. Now, price could also like immediately reverse and tap in from this other block. If you want to take this trade, you will be looking for this other block to take trade, to tap for this other block and move to the downside before this buyer. But for the purpose of this video, I'm not going to call out the sell coordinate. I'm not going to call out the sell coordinate because it's very low probability. It has a very low probability, so I'm going to call it buy coordinate. But price could also react from this other block. Price could also react from this other block here and just be moved to the upside without even returning back, without even coming to this other block here. But you should always buy at discount and also identify your inducement levels. You should also buy at discount and also identify your inducement levels. So since price, we are using it as inducement, right? All we just need is for price to like tap us from this zone and push to the upside to take out this liquidity, which is resting here. Now, price could also tap in from this other block and react from this by demand zone, which this zone here, before pushing to the downside. But I'm not going to call this coordinates because of I want you guys to like trade with caution, and I'm going to give you the high probability or whatever. But if you want to like I'll take the second coordinate, it's left for you, it's not for me. So but I could like take the second coordinate because I will watch what the market is going to do once the market opens. So, but the high probability coordinate here is this buy setup. So I'm going to like call out the entry price, the stop loss from here, and you can also take your profit from this zone. So from the buy coordinates, like from the buy now, our entry price, entry price for 4016.132. stop loss is going to be SL is going to be 3993.544. Now, this stop loss is 22 point something pips away. So try to reduce your loss size. Try to reduce your loss size. Take profit is going to be at this one. It's less for you, it's your choice. But let me just try to add to take profit from this. Take profits. TP is going to be 4099.039. So our TP is going to be, our TP is 83 pips away. Our TP is 83 pips away, giving us a ratio of 3.6 ratio. So now here is stop loss, but don't forget to always like trade with caution. Trade with caution. Always trade with caution. Always trade with caution. Now, if the market opens tomorrow, this is what I want the market to do first. I want the market, if the market could react from this demand zone, if the market could react from this demand zone and give us from this other block here. Now, you have this other block in which the market will possibly react from. If the market could like possibly react from this other block and move straight from, take it right to the outside. Now, also, I want, if the market could also like move straight or react from this FVG or this zone, or react from this FVG or this zone, and move straight to take it by. Here is going to be our liquidity and push the market to the upside to take out the liquidity. So I want the market to react, to return back to this demand zone immediately to take out liquidity from this other side. But if you want to look for a sell, if you want to look a sell, use this other block. Don't use this other block. Good. So I said if we can like have this move, price reacted from this demand zone and this was this move from here, you will sell from here to here. But I'm not going to call the sell coordinates because price will want to take out liquidity. So the best coordinate you are going to use is this buy. I say our entry is going to be 4016.132. SL is going to be 3993.544 and TP is going to be 4099. Now, I'm not going to look at also this zone here because price could also react from this zone and move to the upside, but I'm not going to look at that zone. I'm going to look to here is the main place to buy, but price could also react from this other block here before dishing to the upside. But I'm not going to buy from this zone because I'm going to use this zone as liquidity. I'm going to use this zone as liquidity. If you're in my mentorship program or the first batch or second batch, you understand what I always talk about liquidity. Do not think that do not chase the market. Do not chase the market. We have this demand zone here. We have this demand zone city here. I'll also have this demand zone city here. So if you want to chase the market from this demand zone, you could like get stopped out. But if price react from this demand zone before moving to the upside, you are just good with it. So we need to just be good with it. But to stay safe, just buy from this. Just buy from this demand zone. Just buy from this demand zone. So here is just the coordinates. And please don't forget to trade with caution. Don't forget to trade with caution. Now I'm going to like enter another pair. This is good. This is good for those people joining now. This is just good. Now I'm going to enter another pair, Europe USD. Europe USD. Now in Europe USD, let me go to the one day time frame to understand how it works. All right. All right. This is my one day time frame, right? Price. We have this structure, this break of structure to the downside. We have this break of structure to the downside. Break of structure to the downside. Price reacted from this other block. Price reacted from this other block. Let me go to the 4 hours time frame. All right, in my 4 hour time frame, I'm going to like call out the recent structure. Now, in my 4 hour time frame, let me zoom in. All right, in my 4 hour time frame, we have this break or structure to the downside. We have this break or structure to the downside. We also have this, from here, we have this break or structure to the downside. We have this break or structure to the downside. And price, and this is the other block that caused the break or structure. Let's go to 2 hours. Now, in the 2 hours, I want to define it. This is the other block that caused the break or structure. In our 1 hour, I also want to define it. This is also the other block. All right, this is the other block that caused the break or structure to the downside. This other block. Now, I want us to like go to our 30-minute time frame. All right, in our 30-minute time frame, this is the other block. Now, 30-minute time frame, this is the other block. This is the other block. Let me use this break or structure. You see how price take out liquidity from this zone, right? So how price take out liquidity from this zone and reverses to the downside. All right. Now, this we have this internal break or structure. Let me just use this break or structure. Let me just use this internal break or structure. And this is the other block in our 30-minute time. Sorry, now 15-minute time frame. So now all we just need to do is to wait for price. Here is going to be liquidity. Price is going to like take out. Price is going to take out. Let me just go to 1 hour time frame. Let me see something. In our 1 hour time frame, we have this other block, right? So it's better for us to wait for it from here, but let's wait from here, right? Let's use this other block. So in 15 minutes, I'm going to like shift it. We are not rushing the market. I'm never going to rush the market movement. So let's like reverse it. Right. Let me use this one. I'm going to like use this. Let me use this break or structure. And I'm going to like use this break or structure. So our entry is going here. Also on price, we have this break or structure to the downside. So also have this break or structure to the downside. This break or structure to the downside. Yes, increase the size. Yeah. Right. We have this. Our stop loss supposed to be here. Stop loss. Our stop loss is going to be. Also, let's leave our stop loss 22 pips. Let's leave our stop loss 22 pips. Our stop loss is kind of big, but let me go to the 2 hours time frame. Let me see the other block. In 2 hours time. All right. Everything matches together in the 2 hours time frame. So the one time frame. That is the other block in 1 hour time frame. So there's 30 minutes. 30 minutes. So this is the other block in 30 minutes. I think for those proper risk managers, let's use this other block. Let's use it because our stop loss is kind of big. So let's use it. Let's use this one to reduce our stop loss, please. All right. Our stop loss is going to be 18 pips. 18 pips. But the reason if you want to use this one is that this one price could like react from this one. Price like react from this one, from this other block and to the downside. But since we are not watching price, let's use this other block. Let's use this other block. If price react from here, it's fine. But because price is liquidity, so price we like want to like seek out liquidity from here. So we have before going to the side. But first, I want to also let you know that price. Let's see what market is like moving doing here. So we have this break of structure to the outside. We have this break of structure to the outside, right? We also have another break of structure to the outside. Also have this break of structure to the outside. So now, since the market is not yet open, but I'm going to predict this to you guys. So you guys will like we catch the buy from here first. I'm going to tell you. I'm going to show you this so that you guys, once the market opens on Monday, you guys will like catch the buy to here before like moving to the before the sell from here, or price could even reject this sell. Price could even reject this sell here. Continue buying. But first, I want you guys to we have this order block. The market closed from this order block from here. The market closed from here, right? We have this break of structure to the upside. We also have a little FVG from here. Now, since we have this FVG, I want us to like I'm not using a 5 minute time frame. I'm not using a 5 minute time frame to take my entry, but I just want to like confirm something from the 5 minute time frame. I just want to like confirm something from this 5 minute time frame. All right, in the 5 minute time frame, can you see we have this one here, right? This demand zone here, right? Can you see it? We have this break of structure to yourself, break of structure. Instead of waiting for price at this move, instead of waiting for price at this moment, let me zoom out. Instead of waiting for price to reach this moment and give us a sell to the downside, now I want you to like work with caution here. I want you to like work with caution here. Now, all we just need for the market, all we just need the market to do when the market opens on Monday is to wait for a buy at this zone. Let's wait for a buy at this zone. Let's wait for a buy at this zone. I'm not going to buy from this zone. I'm not going to buy from this zone. I'm not going to buy from this zone. So let's wait for a buy at this zone. The reason I'm telling you this is that if you can look at our 15 minutes order block, right? We have this large demand zone where we have this large order block at here. We have this large order block. And if you can see here, we also have like this one here. And price, I know price is going to like disrespect. I know price is going to like disrespect this order block. Price is going to disrespect this order block. I know this is Monday market. Our market is opening and it's going to full of it's going to be of manipulations, many manipulations. But I'm not going to tell you that price would not. I'm not going to tell you that price will not react from this zone and move to the upside. I'm not going to tell you that. I'm not going to tell you that. Price is going to react from this demand zone under probability. But you know, as a trader, we need to like trade. We need to like trade with. We need to like trade with caution. So we do not chase the market movement. We do not chase the market movement. All we just need is to position in a way that the market won't take us out. So instead of to position here, and once you go to the 5 minute time frame, you know that we have a lot of confirmation. Even though the 5 minute time frame is noisy, but it helps us to confirm a particular zone. Now we have this confirmation now in a 5 minute time frame. Now, what I'm trying to say is that instead of you to wait for a sell from this supply zone, price could even disrespect this supply zone at here. Price could even disrespect this supply zone at here. Since if we can like catch a buy from this demand zone from here, but you also need to like trade with caution because of this supply zone. Now, if we could like catch a buy first at this demand zone, I'm going to be happy. And I'm going to set a pending order from here. I'm going to set a pending order. Once the market opens, I'm going to set a pending order at this zone. I'm going to set a pending order at this zone. So I'm going to set a pending order. Where is my liquidity? Here is going to be my liquidity. Here is going to be my liquidity. Here is going to be my liquidity. Let's move to 15-minute time frame. All right, here is going to be my liquidity since price is reacting. So I want price to like disrespect this zone. I want price to like disrespect this zone and tap us in from here. Let's catch the buy. Let's catch the buy instead of waiting for the sell. Let's catch the buy. So right now at Euro USDT, I'm not going to call out any coordinates. I'm not going to call out any coordinates because of what I'm seeing here. Price, if I call out a set coordinates here, price to like disrespect this zone. Price to like disrespect this zone because of this demand zone we are seeing from here. So if price reacts off from this block, we just want a push to the upside. But first, let's see what the market is going to do on Monday. Let's see what the market is going to do on Monday. But looking for a sell at this supply zone, you may get liquidated because since the price, I'm not just trading with session, but just trading with what the market is like giving us, right? I'm just trading with what the market is like giving us. So since the market is giving us this move, if you can even see it clearly, this here is market structure shapes. The market gives us a market structure shape from this zone. You have a market structure shape from this zone, and we have a break of structure to the outside. So if you can read the market structure, you understand what I'm trying to say. So now, since you are having this confirmation, this means that price is ready to change trade to the upside. Here is liquidity. Price take us liquidity from this zone, give us a market structure shift from this zone, give us a break of structure from this zone. So we have this demand zone here. We have this other block which cause the break of structure to the upside around this level. So I'm not going to like trade on this other block since price is already reacting from this other block. So I'm going to target here. So I'm not showing you in 15 minutes, but 5 minutes, but I'm going to use my 5 minutes to confirm something. Now, as I already said before, now we have this market, so we have this price takeout liquidity from here. We have this market structure shift. We have this in market in our 55 minutes. We have this market structure shift here, a break of structure to the upside, another break of structure to the upside. So now this is the level for us to catch a buy to sell a buy to sell. So here is going to be here is going to be we're going to catch the buy first before selling. Now, if I'm going to catch the buy before selling, right, I'm going to use here as the liquidity. I'm going to take from here and move it to the upside. I'll move it to the upside to catch the on this one. Let me just remove this. So I'm going to put my here and stop loss. I'm going to decrease my stop loss. So if you want to join me to take this trade, but all you need to do is trade with caution. So my stop loss is going to be, let me make it 8 pips. All right, stop loss 8 pips away. Take profits 30 pips, giving us 3 risk reward ratio. 3 risk reward ratio. So I'm just going to call out this buy coordinates. Yeah, if we could catch out this buy, move it from there before selling. But I'm pretty sure that the market may disrespect this order block. In the sense that the market, if we can catch the buy, right, the market could be building out break of structure to the upside, break of structure to the upside, break of structure to the upside. The market will react a little from this supply zone, giving us the break of structure, pushing price to the upside. So those people waiting for a set setup here is going to get liquidated in the market. So in the buy setup here, I need you to trade with caution. I'm going to try to call out the buy coordinates at Euro USDT. Stop loss 8 pips away. 8 pips away. So I'm going to call it buy setup. Alright, buy setup, entry price. Alright, entry price. Entry price is going to be entry price is going to be 1.1496 is going to be our entry price. Our stop loss is going to be 8 pips away. SL is going to be 1.1488. So then I'll take profit. Take profit should be at the point of reversal. Our take profit is going to be TP. So TP is going to be 1.1526 is going to be CP. Don't forget to trade with caution. Always trade with caution. trade with caution. When this can happen in the markets, trade with caution. So trade with caution. As I say, before going to from this to wait for price from this demand supply zone here, right? Let's try to know that we can catch a buy from here to here. Let's catch a buy from here to here to take out profit from here. Now we have this breakout structure, right? Since we have this breakout structure, now I want price to disrespect this breakout structure and even disrespect this zone and tap us from here. Here is going to be our liquidity. And once you go to the 5-minute time frame, you know that we confirm a buy. We have the 5-minute time frame is noisy, but let's use it as our confirmation. So price will take out liquidity from this zone. I want price to disrespect this zone, tap us in from this zone before moving to the outside. And I have got the coordinates. This is a buy setup. Entry price is going to be 1 points from here, 1.14963. Our SA is going to be 8.8 pips away, just 8.8 pips away. So our take profit is going to be 1.1526. So now I want us to like catch the buy here before moving to the side. And I already stated is that once we have this buy setup, price could even like disrespect the supply zone, in the sense that if price could like come here to take out liquidity first, may have this zone here, price moving like this, price even like rejecting from this supply zone, right? We have now breakout structure and push price to the upside to take out liquidity from this zone. So please don't forget to trade with caution. The market is uncertain, right? So, but we have reason to take the trade. We have every reason to take the trade from this zone. So, but always trade with caution. Please trade with caution. So I'm going to go to another here. All right, this is USD JPY. All right, in USD JPY, let's go to the daily time frame. Or let's go to the daily time frame. All right, this is USD JPY. You see how price is like pumping to the outside, right? We have this breakout structure. Right? This is the order block. This is the order block. This breakout structure. Have this order block. We have this order block. Now, price is reacting like aggressively to the outside. So let's move to the 2 hours time frame first. Now, let's refine the order block on this block. Let's refine the order block. Now, we have this breakout structure. We also have this breakout structure. All right, so let's go to the 1 hour time frame. We have this breakout structure and we also have this breakout structure, right? Let's make price is currently like reacting from this breakout structure. Price is currently reacting from this order block. Price is reacting from this order block. So Price is reacting from this. I will also have this which is sitting around. So in our 30-minute time, I want us to define order block. So the order block is here. Alright, price reacted off from that zone, from this order block, from this order block. Now I want us to like go down to 15-minute time. In our 15-minute time frame, I want us to also like define the 15-minute time. Alright, this is going to be my take. This is going to be my take in USD JPY. This is going to be my take in USD. So all we just need, since the price is bullish, but we're having some correctional move to the downside, right? Since the price is bullish, we're having some correctional move to the downside. Now, the best way for us to wait for price at this zone, we want to take a buy. We want to take a buy. So it's to wait for it at this zone. It's to wait for it at this zone. Now, the reason I'm telling you should wait for it at this zone is since the market is opening on Monday, we also have this zone. We also have this other block, right? We have this other block, but I don't want to use that other block because I'm going to use that other block as inducement. Price is like moving like aggressively to the downside. The market is like throughout last week, the market is like moving. The market is moving bullish to the upside. The market is moving bullish to the upside. So for one price, instead of using this OP, instead of using this other block here, I'm going to wait for it at this OP. So there are little things you need to consider most of the times because it's very much necessary. Once you think that price cannot return back to a particular order block just because price missed out the order block, price need to refit that order block before moving. Price need to refit that order block before moving. So if you want to look for a buy, you're going to look for a buy at here. I'm only going to call out the buy coordinates, but first, the reason I'm calling out the buy coordinates is because it's high probability since the price is bullish to the upside. But now I want you to like do this on Monday if the market is moving. So I want you to like know the reaction of the market. First, let me know whether we can like catch the buy at this zone and drop ESD JPY at that zone. So let me know where we can catch like a set of this one. So we have this break of structure to the downside, right? We also have this break of structure to the downside. We also have this break of structure to the downside. This break of structure to the downside. And we also have this break of structure to the downside. Also have this break structure to the downside. Now let me show you like there is just something. Price reacted up from this other block. Price reacted up from this other block, and you can see the move before price reacting from this area which is here, right? Now we have this zone. Price did not react from the other block. Price is reacting from Price is reacting from the average which is here. So now we also have this supply zone, this order block in which price did not react from. Now, here is what I want you guys to do if the market opens. So if we can have a move, a clean move, we are going to sell USD JPY. We are going to sell a USD JPY. If we can have a move to the upside, here is going to be liquidity. Sell USD JPY to this point. Instead of waiting for the buy, right, we are going to sell it at this point. You are going to look at this zone in case price wants to reverse from this zone. You're also going to look at this zone in case price wants to reverse from that. So, but the best way, the best place to buy your USD JPY is from this zone. And if we want to sell, we should look at the sell coordinates to push price to the downside. So we have this price reacted off from this FVG price not react from the other block. If you are in my mentorship class by John so you understand that I said even though we have a little FVG here, it's also like more probability, right? Since price do not feed the FVG here and price do not even tap on the other block, you have a little FVG here, which also confirm that this setup is valid. You have this FVG here, right? And also have this other block. So also we have price do not tap in from this FVG. Price do not tap in from this other block, which is here. We have this zone. We have now we also have a little FVG here. We also have a little FVG at this point. We also have a little FVG at this point. So this is our order block. This is our order block. This is our order block. So we are buying at the premium. We are buying at the premium. We are not going to. So we are selling at the premium. We are not going to sell from this OBA. We are going to sell from this OBA and move the market to the downside. So I'm going to call out the sell coordinates on this USD JPY. I'm going to call out the sell coordinates on USD JPY. Right. Right. I'm going to use here as liquidity. Any price to take out liquidity on this one. Stop loss. Alright, stop loss is going to be this zone. Stop loss is going to be this zone. Alright, our stop loss is going to be 23 pips away. 23 pips away. Let's write our USD JPY to the downside. So we cannot wait for the buy ahead, but price will have changed. So let's ride it to the downside. But first, you can take profit from the point of reversal. You can take profit from the point of reversal. Yeah. You can take the profit from the point of reversal. But it all depends on you. If you can ride it from here, or here. But this should be your take profit one. This demand zone should also be your. You should also look at this demand zone to take out profit two, or this zone to take out profit three. But let's make our take profit more realistic. Let's make our take profit more realistic. So I'm going to call out the cell coordinate on this pair. I'm going to call out the cell coordinate on this pair. Alright, here is going to be my stop loss. Stop loss is going to be 23 pips away, 23.4 pips away. Here is my holding. Here is going to be my liquidity. You see I'm marking out the liquidity, right? You see I'm marking out liquidity. Try your possible best to identify liquidity and ride together with the market. And don't always forget to trade with proper risk management, because price like we have this setup, right? A plus setup. We have every conferences that we are looking for here. We have this break or structure to the downside. Now we know that the market is moving to the downside, right? We have this break or structure to the downside. We have this. I'm going to use here as liquidity, since we have this other block here, which also causes break or structure to the downside. So here is going to be the liquidity. We have our LVG intact. We have our LVG that which make it an A plus setup using our conferences. But also I want to let you know that we are just speculators in the market, right? So price will also like take out before reversing, or price will like take out long moving. But since we know the structure of the market, we know how the market, we have conferences that is going to like guide us. I need price to like tap us from here before moving to the downside. So I'm going to call out a second coordinate at USD JPY, and that's why you always need to trade with proper risk management. Proper risk management is always good. It's always good, even though we have all set up, everything intact, everything we have our setup intact, everything is clear. So we also need to like trade with proper risk management. All right, this is the second net on USD JPY. Second net on USD JPY, right? So entry price is going to be 157.033. Our entry price is going to be 157.033. Our stop loss, our SL is going to be 157.267. Also, our take profits is going to be, our TP is going to 156.196 for trade with caution. Let's trade with caution. Right. Please, you need to trade with caution. What I mean by caution is that you need to trade with proper risk management, because markets could like move away from speculation. Now, I want you also before analyzing the last year, I want to also say this: price could also respect this supply zone here. Price could also respect this supply zone and move to the downside. Price could also respect this supply zone and move to the downside. Price could also respect this supply zone to the downside. If you can look more carefully, you can see that price is currently reacting from this zone. Can you see this zone? Hello, can you see this zone? Please, if you can see this zone, say yes.
Yes.
All right. Price could also react You see how price is reacting at this supply zone, right? Price is reacting from this supply zone. So price will also continue reacting from this supply zone and move to the downside. So the market is full of, but for us to like look for a sell, this is a great place for us to look for a sell. The market is full of uncertainty. So anyway, you want to react from price is going to react. But for us to look for a sell, we are going to sell it to the downside. So this is going to be the setup for USD JPY. Here is just they said the entry price is 157, the stop loss is 157, TP 15 or TP is going to be 156. Please trade with caution. Please trade with caution. What I mean trade with caution is use proper risk management. Do not trade with money that you cannot afford to lose. Do not trade with money you cannot afford to lose. All right. The last pair I'm going to analyze before our class to go is JPY GJ. I'm going to analyze GJ before close this section. All right. Let me go to 1 day time frame. Let me go to our 1 day time frame. All right, in 1 day time frame, we have this break or short. We have this break or short. Now we have this zone that causes the break or short. All right, let me go to the 4 hours time. All right, in our 4 hour time frame, so price is like far from this one. Price is like far. So we also have this break or structure. We have this break or structure. Now price, we also have this break or structure. Sorry for that. We also have this break or structure. Price is kind of reacting from this other block. Price is reacting from this other block, which is here. And also we have this other block here. All right, let's go to our 2 hours. All right, in our 2 hours, we have this other block. Price reacted off on this other block. All right, in our 1 hour time frame, we also have this other. Let us read internal structure. We have this break of 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 structure. So we have this break of structure. This liquidity, not a break of structure. If you are in my mentorship class, you are someone this liquidity, not a break of structure. So price reacted up from this order block. Price reacted up from this order block. Also want to like move to the downside. So we have in our 30 minutes have uh, we have this point. We also price reacted up from these points. All right, price is reacting from this point, right? So in my 15 minutes time, this is the order block. We also have this order block. Now I want us to like read what the market is like currently doing at this state. I want us to like read what the market is trying to do. But first I want us to like this one. Right. Now we have price like at this point right here, price gave us the last break of structure. Right? And I want to let you know where is price reacted up from the other block that caused the break of structure. Here's the other block that caused the break of structure. Price reacted up from this other block that caused the break of structure. So we have this break of structure to the outside. So price, this is the other block that caused the break of structure to the outside. You see how price seek out liquidity, right? Price seek out liquidity by taking out um, this swing low here. Price seek out liquidity by taking out this swing low and reverses to the upside. Reverses to the upside. Now, price also reacts from this supply zone here. Price also reacts from this supply zone to the upside. Yeah, this is what I'm going to do for you guys. This is what I'm going to do. This is where I'm going to say to you guys. If you want to look for a buy, I'm going to give you a buy coordinate, but a sell coordinate to this one. I'm not going to give you a sell coordinate. I'm not going to give you a sell coordinate. Now, here's what we want to look at if we want to sell. If we want to look for a sell coordinate at this one. First, I want price to like move to the downside and give us another break of structure. If price move to the downside and give us another break of structure, leave us an FVG with our block here, we jump with the trend, right price to the down, please, right price to the downside. Am I clear, please? Hello, am I making sense? Please, am I making sense?
Making sense, loud and clear.
All right, so I'm not going to give you a set coordinate at these points. I'm not going to give a set coordinate at this point. So all I just want to see in the market, all I just want to see in the market is that price to give us a break of structure from here. After we have this break of structure to the outside, we need price to give us an FVG here and also other block. And we have to break price to the outside. So we need to have a fair value gap and other block here. Here, here going to be from here. This is just speculation. This is just speculation. Like what I'm trying to say. This is just speculation. This is just speculation. So if we can have a break of structure to the downside from this side, we need price to reset from the price to the side, and the price to the downside. So that is just the speculation for the for the sell setup. Now, if we want to look for a buy setup in GJ, right? If we want to look for a buy setup in GJ, we have two demand zones at this spot. We have two demand zones at this spot. We have this demand zone 1 and also demand zone 2 at this spot. So now at this demand zone 1, it all depends how price is going to move aggressively. If price is going to move aggressively, we will take out depending on that. So for the sake of the newbies in here, I'm not going to call either a buy coordinate or USD, this GJ. I'm not going to call a buy coordinate because of the sake of newbies. Now, if I call it, they may go and set a depending order. The reason I'm talking about it is that we have this zone here. We have this zone here. I also have this zone here. So I know price is not going to like move to the answer immediately. But for me to look for a buyer at this point, first, as I said, let's look at what the sell coordinate is going to do. So let's look at how the market is going to react first. But if you want to take a buy, it's on this zone. If you want to take a buy, it's on this zone. But first, let's look at what the market is going to react at this zone. Let's look at what the market is going to react at this zone. As if price could give us another market structure, a break of structure to the downside. We have a fair value gap here and also another block with right price from there to the downside. So to the downside. So this I just want you to on Monday if market opens on Monday. This is what I just want you to look at. Let's price give us a break of structure to the downside. Find the other block that causes a break of structure to the downside. Right price to the downside. Sometimes I also want to let you know that sometimes price do not, if you are waiting for a reversal from this point, sometimes it's low probability. I'm not going to lie you. It's low probability. Sometimes reversals will lead you to SL. Reversals will lead you to SL. Let's just trade with the trend. Since the trend here is looking bearish, right? And we have a major pullback for the higher time frame. So let's just trade with the trend. Let us trade with the trend. But if you are advanced enough, you look how you can buy from this one. So, but I don't want to call this zone. I don't want to call this demand zone here because we have this one. We have this one. Yeah. So I'm not going to give any. I'm not going to give you any setup on here. I'm not going to give any setup. So this is my speculation on GTA. First, let's wait for now break of structure to the downside. We find the other block that causes the break of structure, which also have FVG. Let's set our pending order there. Allow price to tap in from the other block and push price to the downside. Your TP should be at this demand zone. TP should be this. So I'm going to stop the lesson. I'm going to stop the lesson here.